Okay, as usual, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Alright, let us get started straight away. Let's have a look what we have on our agenda for this particular week. Of course, last week was a very filled news week. Ended spectacularly on Friday with non-farm payrolls. Basically, new jobs created in the month of February was nearly at 300,000, which was way beyond the expected number. Unemployment in the US dropped to the lowest levels since 2008, I believe it was May, and as a consequence of this great new stimulus and sort of the new jobs being created and the economy being looking very strong, all of a sudden the interest rate increase, which is on the table for the US, all of a sudden now becomes more playable in the closer future as opposed to further down later in the year. So most people are now starting to speculate, also analysts, that perhaps in June we could see, which is basically their summer, we could see the commencement of interest rate rises in the US. So consequently, as you would have seen, and we'll have a look when we look at our charts, the US, the dollar did very well against most currencies, and now the bias has all of a sudden changed back to where we were a little bit earlier in the year. So we'll analyze that, we'll have a look at that. I guess in terms of news risk for this particular week, there's no US data until Thursday, which is retail sales. Or for the Aussie, we have some China CPI figures and industrial numbers Tuesday, Wednesday. We have, what else do we have for the Aussie? We have the business confidence and employment change on Thursday for the Aussie. But I think this week the biggest one is probably going to be the Kiwi, alright, and mainly because it's their official cash rate decision, whether they will be moving their rates or whether they will be staying as they are. So the Kiwi Dollar is going to be really pretty much the one to watch. It happens at the very early hours of Thursday morning, so look out for a couple of surprises here with the Kiwi Dollar. We'll have a look at what could play out when we look at the charts, but because of that and a bit of US data, I believe this week it's going to be the New Zealand US dollar which is going to be the most vulnerable to data. Okay, so make sure that you take note. As always, these times that I'm showing you on my screen are in my local time, which is Australian Eastern Standard, Daylight Savings, or Sydney time. Okay, alright, let's bring out our charts. Let's see what we have on the agenda and let's get started straight away. Okay, this week let's start off with the Aussie dollar. First of all, let me just get rid of a couple of things and we'll start to analyze this. Now, last week we picked out a trade which is based off those two candles. We saw the trade, I believe we were around about here somewhere last Monday when we saw this particular trade. It was let me show you so that we all remember a bit better. We're definitely in a downtrend, okay, and we were trying to pick off a high to continue the journey down. Now, we applied our price action strategy, which we covered last Thursday. Alright, so it should be fresh in everybody's mind, and as I zoom in, you can clearly see that the reason for the trade was that we had a engulfing candle at precisely the correct spot. So basically the idea was that we would to trade it downwards. Now, this particular trade right now has reached its 1-to-1 risk-reward ratio, so please take action if you need to take action. Remember, with this type of trading, normally we're looking at 2-to-1, but when we get to the 1-to-1 level, we do want to either move our stop to our entry or take some profit, or at the very least consider it. Nobody wants to see a trade that is up 100 pips turn into a trade that loses you 200. Okay, so let me just get the numbers. Your stop on this one would have been around about 115-ish, 117-ish. The trade did get to about that exact level there, so I'm just bringing it up. Of those, who's in this trade still? Who took this trade? Can I just get a show of hands? Yes, Rav. He's still in. Bijan did as well. Karen, oh no, Karen did not. Okay, so if you're still in this trade, we have reached the halfway point where the reward to risk ratio is 1 to 1. We all understand what that means, right? I risked 115 pips, the trade is 115 pips up. It's not our final destination, but we are halfway there. Alright, so let me have a look right now while this trade carries on what else I can see. So let me just get rid of that marker. The only thing that I can see is that we've got this nice consolidating region in here. What I do like about this particular setup that we saw there is that effectively you probably take something there, but if you stay with this trade and we break this level down here, then the next target can be easily reached. All right, I'm still of the opinion, I haven't changed my mind, that especially what happened with the US data coming out on Friday, if they rate the interest rates a little bit in June, and don't forget that the RBA is looking at reducing our interest rates, we could be at the 70 level probably in about the next 2 to 3 months. Alright, so you need to, that's not a good enough reason for me to take a trade right now and hang on forever. That's not what I'm talking about. Fundamentally, if I was going to take a fundamental position, that's very, very much in play. So for this week, if you are in the trade, take action accordingly. If you are not, the only trade that I can see on the Aussie dollar is still, I have no interest in buying Aussie dollar. Okay, I'll just repeat that. I have no interest in going long. What I would be looking at is I'm very, very keen to see what happens at this level there. The market's doing this, and if I get a nice breakdown, I'm very, very much interested in jumping into this trade again. Okay, now of course if you're in it, the break will accelerate you towards your target and it will pan out in any case. Bijan is saying there's a bearish engulfing as well. Friday's candle, let me have a quick look at that. So you're referring to that candle, this one here, Bijan? Yes, but it's not in a critical position or in a position like if I just saw that trade right like that, for me it wouldn't be a reason enough to take that trade. The reason we took this trade, remember, was because this candle was the one that had the little fractal at the top. That's why we took this one. The fact that you get this is just a feel-good factor that it's still looking very bearish. I'm already in the trade, so there's no need for me to rejoin it. Okay, if I did not take that and I just saw this, it would not have been a good enough reason for me to enter. Does that make sense to everybody? Yep, we're all good? Fantastic. Alright, so Aussie dollar this week, look out for a break of the 76 level. Alright, now if I see a nice break through here and it looks like a really nice setup, I will push out a Twitter message. Just again, remember, if you're not on there, I haven't sent anything out last week, at chat FX. Look me up. oops, that's supposed to be an @ sign, at ChatFX. All right, and I will push it out, but I need to wait and see what happens through that 76 level. All right, let's move on. Euro USD. Finally, the Euro USD gives us the reward. So I think there was only really one or two people that I remember that were still in this trade. The original trade was these two candles. It hovered and hovered and hovered, and then finally shot down. Our stop held. We never got stopped out of the trade. This trade is now finished. I think we ended up picking up just over 400 pips on the trade. Again, the last movement was accelerated due to the Greece situation, and non-farm payroll, of course, was responsible for this candle on Friday. Now, very, very important to note, today is the first day that the euro will begin their buy-in program for the QE program. Okay, so if I say to you in normal language, basically, if you remember, they passed the ECB passed the motion that they were going to introduce a quantitative easing program, okay, which basically meant they were going to flood the market with euros over a space of 18 months. I can't remember the number off the top of my head, but I think it was like something like $1 billion over the 18 months. Today is the first day. So when Europe comes online in about an hour and a half, 2 hours time, probably the bond market is going to be affected, because what's going to happen is they're going to start buying bonds, other notes and things of that nature, because what they're trying to do is they're trying to push out euros into the economy, so they buy bonds off the retailers and investors and so forth, and then they're going to flood the market with the euro. So it's going to be very, very interesting to see, especially today, how the euro trades on the first trading day of the easing program. Okay, now on the euro right now, basically the trade that we had that I just said, that's finished. We've taken a 400 pip profit on that one. Right now, as it stands, let me have a quick look at a 4-hour chart. I couldn't see anything beforehand. Just bear with me one moment. Let's see if I can see anything now. Okay, the only thing that I can think of is, okay, what I've done is I've taken a Fibonacci level from down there to this peak up there, and then if I push down, I'm sitting on a 168 extension. It's a number that I really, really like. It doesn't coincide with a round number. If you really wanted to try a little cheeky trade, possibly the way that I would try it, I'm not going to endorse it, to be honest. I don't. If you were going to try it, try and see if you can find a price action level to bounce you back. But you're not going to see that for about another day or two, because we need 2 more candles to confirm. So let me try and draw what I think may happen. Okay, so let's say today, for example, we get a candle that looks like this. Hopefully it doesn't go too much lower, because if it goes too much lower, then that 161 level doesn't hold. Let's say the candle looks like this, little wick there, and then tomorrow you get another little one like that inside. Then basically the next day you could look at a cheeky long trade off the Euro USD. Does everybody understand what I mean? If this current candle drops down too much, then forget about it. Ignore it, because it means that the 1618 fib level would have failed. So I need this level here to hold. Alright, so I need this candle to kind of hold, get a candle up there somewhere, then an inside candle, and then up in that direction. Okay, so for the euro, right now, I don't have anything. What you'll often find as well when you're looking at markets is that as some of your trades start to come off and they finish out, everything else gets wiped out and you don't really have any setups, so you've got to start fresh again looking for a whole new bunch of setups. So with the euro, the only thing that I can see is if you want to try a little cheeky bounce off here, but I can't try that. At the very least, the trade would be on Wednesday morning. I need to see this candle, tomorrow's candle, and then on Wednesday morning I'm ready to take action. Okay, let me move on. GBP USD. By the way, if you have any questions, just please type them in and I'll make sure that I address them for you. Okay, this was the GBP USD. This was the trade of the week. We wish we could find trades like this every week. 300 pips, 1 week. Who took it? Who's closed out? Everybody should have closed out on this trade right now. Can I just get a show of hands? Who captured this trade? Bijan, well done. Rav, yes. Anybody else? Roy, good stuff. Anybody else? No? Okay. Remember, there was 4 reasons we took this trade last week. Let me recap very, very quickly. First reason was it looked like we were on some kind of a downtrend like that. We were trying to pick off the top. Okay, so that's the first reason. But we did a Fibonacci from there to here and up to here, and it was the 61.8 on the money. Okay, so there was a 61.8 level. Reason number 1. Reason number 2 was, let me see. Reason number 2 was we had a nice engulfing candle setup on the fractal. Reason number 2. Reason number 3 was we also had divergence. Okay, we had divergence. Let me see if we can see it a bit better. Basically, we had our indicator here going up and we had our price going down. So we had divergence. Okay, and I think that was it from memory. Okay, so those were the reasons that we took the trade, all right? And basically, look what happened. It just dropped down very, very nice for us. So that was a 2-to-1 trade, which is finished out. Okay, now this week, what we can see is there's only really one thing that I'm kind of looking at. Okay, we're approaching the 150 level. Okay, and so I'm keen to see what happens down here at that 150 level. Okay, the GBP is a tricky one because there's fundamentally at the moment it is showing a lot of divergence from the euro and the USD. So what that basically means is that fundamentally, like the economics of the GBP is not following what it should be following. It's going against its norm. Okay, so it's kind of a little bit confusing. Like the reality is fundamentally we should be going up. Okay, but it's not happening. All right, so and as you can see last week we took a short trade when it looked like we could be breaking towards the start of a new trend. Now it hasn't happened. Now what's important to me this week is to see the behavior, what happens at around about this 150 level. Okay, it's a massive decade number. Okay, it's also going to be a double bottom as we get there. So I'm really, really keen to see what happens around the 150 level. What kind of trade we can probably get out of this, I'll show you right now. Let me zoom in a little bit more. And let me just draw a line at the 150 level. So this line there is roughly at the 150 level. Let's say I get a candle that does something like this. Let's say today's candle ends up coming down like that, and let's say it puts a wick through but stays above, okay? If I see something like that, and then tomorrow I get a candle that does, I don't know, even something like this, and I get an inside candle combination, then on Wednesday I am happy to trade price action off a double bottom bounce. Okay, I usually don't like the double bottom trade that much. However, if I get price action and this line holds, now it's important that only the wicks go underneath. If the body closes below, then it could change everything. So for example, if I get this instead, I get a candle that closes down there like that, well then all of a sudden now I'm interested in trading downward. Okay, does this make sense to everybody? Yep. Okay, fantastic. So what's going to be very, very, very important is I get the feeling that we are probably going to test this line, okay? Even if a wick comes down and gets very, very close, then I'm going to be looking for an inside candle combination as a bounce off my double bottom, and I'm going to be looking for the trade in this direction if I get a bounce in this area somewhere. Okay, if I see it, I will send it out as a Twitter message so that we can all, at least if you don't want to trade it, you can monitor it and see how it goes. Okay, it is a daily candle, so these are really genuinely good trades. All right, that's all I have on the GBP USD. Let me see on a 4-hour candle chart for one moment. Almost feels like there's a bit of a flag pattern here, isn't there? The only thing I don't like about this flag pattern is that there's all this memory. We really gotta, if this flag pattern was underneath this line, like if it was down here and it was doing like this, then I really like it for there. But because it's not, and there's all this memory over here, I kind of inclined to not try and use that kind of flag pattern. Okay, so now everything stands as I said it. We're going to wait to see what this candle looks like, and possibly we'll have a trade on Wednesday. Okay, Wednesday or Thursday. Alright, let's carry on. Let's see what gold is doing. Now of course US numbers came in very, very strong. So what it basically meant was shifting money around. So when the dollar is very, very strong, we tend to get a weakness in gold because money moves across. So if you think about the logic of it, if there's a currency, okay, I'm talking dollar, meaning US dollar. If the US dollar all of a sudden is showing potential that it's going to increase interest rates and that they're going to pay you interest for having your money in the bank, is that sound to an investor like a much better proposition than having your money in a piece of metal that grows no interest at all because there's a finite amount of it? Does that make sense? So usually when that happens, it's a natural shift. The commodity will generally go down. Does that explanation help everybody a little bit? Yep. Okay, fantastic. So naturally, good job numbers, optimism in the US, bang, gold dropped down, and the levels that we were holding, we were kind of long in there. I don't think anybody took the trade from memory, but technically we were long and we would have got stopped out now. So that trade is over. So let's have a look how we can play this out now. Let me get rid of some of these lines now because I don't need them anymore. When I stepped into my 4-hour chart, I saw some really nice consolidation in there, and if you were a breakout trader, there was a really nice breakdown. Okay, now we didn't get that, so the only thing that I can think of right now for gold would be is if I put onto my charts a 13 EMA, there it is, and the way that we trade London, I'm doing it on a 4-hour chart here, is if I get a pullback to where we touch, then you could continue with your trade in a downward direction. Okay, if the US shows the signs that it was showing, well then it's going to turn out to be a pretty good trade. If it doesn't, well then obviously it's not, but that's really the only thing that I can see. This type of trade, we haven't really been taking this type of trade on a Monday, but I just thought I'll share it. It's what I can see. The only other thing that I just thought of, give me one moment. Okay, the only other thing that I can think of right now on a daily chart, you can see this region down here that I've just marked in. The market bounced off that area before. We could be making a double bottom. We could be. If today's candle looks anywhere something like that, then on Wednesday you might want to go that way. It's a contradicting thought process though, because I just said to you, continuation out of a breakout, we're looking to go down, or if you want to be, if you're a trend kind of trader, you'd be doing that. If you're a counter trend trader, you're going to be trading a double bottom and you're using price action to bounce off it. Okay, they both have equal merits. I don't really know which one I like better, so I'm going to have to leave that one up to you to see which one you like better, but they both have an equally good reason to take the trade. To be honest, I probably favor this one a little bit more because it's off a daily candle. Okay, it's a little bit easier to pick out. Your levels are more precise as well. I'll keep an eye on it, and if I see it, I've got to wait for this one. May be ready tomorrow. Okay, so if I see it, I will push it out. Bijan saying it was looking a triangle as well. Gold on a daily, Bijan? I can't see that. What I can see maybe, but it's very, very early stages, is here. Across there and maybe across there, but it's very, very early. And the only reason I'm looking for it is because we broke lower lows there and we broke higher highs up there. But this pattern is very, very early. If this pattern turns out to be a pattern, it's not going to be for at least another 4 or 5 months. Okay, so I can't see anything else. So let me get rid of those lines. Okay, let's carry on. US yen. Let me have a look at the daily. Okay, we were trying to track this channel last week and we've popped out. Okay, so we didn't really get a trade, so there's no harm done. We just delete it now and we'll start looking for the next one. On the daily chart, the triangle that I was tracking, remember we popped out there and we hovered and hovered and hovered, and now we've gone through the magic 120. Okay, I was reading this morning, or I was watching an interview, I can't remember what it was, but there is a better than 50% probability that the Bank of Japan is considering further easing in the very near future. Now, if the Bank of Japan does further easing, what they're trying to do means they're trying to weaken their currency. The US is doing the exact opposite. They're just about on the verge of increasing their rates. If the two come together, we could see 130. Okay, now I know I've said that a little while ago, and but you also got to remember when we were tracking the US yen down here, where we were at about 110 and we went all the way to 120. Okay, we have another one of those situations in the background. It's kind of like, you got to think of it, it's the perfect storm. The clouds are gathering and everything is starting to slot into place. If this slots all into place, I believe that possibly by October, September, I don't know the time frame, we could be at that number. Okay, so if anybody was trading the US yen breakout of this triangle, well, you're still in that trade. That trade's probably about 2 weeks old now, 2.5 weeks old. We have gone through that. The next critical level is there, what is that number? Which is 121.80. So we need to break the high up there. That is the next critical level. So we'll have to see what happens over here with the US yen. Essentially, I believe the door is open. If the Bank of Japan does in fact give us an indication that they're looking to ease, okay, then the door is completely open. We take out that 122 level and we could, at first instance, 123, 124 comes into play straight away. Okay, so let me have a quick look at a 4 hour, see if I can find us a trade for today. I can't see anything. Has anybody seen anything on the US yen based off another strategy that I can maybe have a look at? Okay, so US yen, if you're in, it's looking good. Let's see what happens at 122. If we break 122, what we're going to be looking for then is we're going to be trying to buy all the dips. Okay, so and we'll see if we can find some. But for this week, it's finally heading in the direction that we originally wanted. It's taken a bit longer. Let's see what happens this week coming. Okay, which leads me to the euro yen. Okay, let's have a look. The channel that we were tracking didn't play out, okay, and this we popped out in this area there. All right, so I just want to talk about one thing over here. Okay, let me zoom in a little bit, and particularly, I need to zoom out. It's easier to do it this way. Okay, did anybody trade this little setup over here? Now, I wasn't watching it, so I don't know if it broke the top first and the order had to get cancelled out. Did anybody trade that there? Can I just get a show of hands? Okay, Rav, T-Chaser, Karen might have. Alright, now what I wanted to say about this one here, when the channel is so well defined, meaning look how many touches we got at the top. Okay, I have to respect that top line. We also have the two down here. So that pretty much, it's very difficult for me to reposition the channel to include this spot over here. That point there was outside of the channel. Okay, meaning if you try to take that trade in that direction as price action, then you've done that incorrectly. Alright, now if you traded a break down, well, remember we said we don't trade a descending channel down, so that would have been no in any case. So if you had done this as per what we always do, we technically did not get any trades, so we didn't trigger anything. Okay, so let me have a quick look on a daily. Let me get rid of those channels now because they're no longer useful for me. Okay, on a daily, it's pretty obvious we might get an opportunity to trade a double bottom. Okay, to be honest though, because this is the euro and the yen, it's really a matter of which one is weakening quicker than the other. Okay, I'm kind of inclined to go that way, and I think this is not going to hold. However, if you get the correct price action at the border, if you get the correct price action at the border, it's a legitimate trade to trade it upwards as well. Okay, they're two currencies that are both weakening. All right, so it's okay. You're not trading a really strong currency against a weak one, if that makes any sense. So what we've got to look for with the euro yen, if you're going to trade a double bottom bounce, what you need is you're going to need a candle. You're going to need price action over here. Okay, so let's say this candle might come down. What you don't want is you don't want this candle to be a candle that closes underneath like that, because if that happens, well then you look for this trade. If this candle only puts its wick through like that, for example, then the next candle you get an inside one, then you can attempt the double bounce. Okay, or the double bottom, should I say. So that's the euro yen for us. Any questions on that one? We're all good? Okay, so I'll leave that mark there so that I can try and remember. Kiwi Dollar. Let me have a look at the daily. Aha, the Kiwi Dollar. Who traded it? Okay, what we were tracking, just to remind you, we were tracking the bottom of all this consolidation, which was now becoming, we thought was becoming resistance over there, and we drew a line over here. So we were trading this, and we thought, let's see what happens. Are we going to break up, or are we going to break down? And we finally got the breakdown. That's the trade that we took. Did anybody take it? On a 4-hour chart, looks a bit cleaner. You can see it there. Okay, possibly you could have taken this trade. If you did it off the 4-hour chart, I think here would have been a legitimate entry. Once we got through that, and there was a very strong bearish candle, and then basically into that direction. Alright, so what have we got right now? Now remember, this is the one that's going to be most vulnerable to news this week. Okay, so I'm kind of a little bit reluctant to do anything on the Kiwi dollar. Let me just check what fib level this is. We're sitting at the 168. Or there or thereabouts. Okay, this is what I think. if the current, I'm on a daily chart, okay, so if the current candle closes above the fib level, above, okay, so the candle will look something like, it could be a red or a blue, but let's just say if it's a blue candle, let's say it ends up looking like this. And it's just got the wick that went through, okay, and then tomorrow we get an inside candle on it, then you can try the bounce off the 61.8 Fibonacci level, okay, but it all depends on the current candle, how it closes. If it closes below the 61.8, like even if it closed where it is right now, well then no, it's not valid and I don't have anything. All right, it is a counter trend trade, so I'm just calling it just in case anybody's interested in finding more trades. This pair is the one that's under the spotlight for news this week, so take care on that one. Does everybody understand the trade that I'm calling out, that I'm saying? It's very, very important that the body does not close underneath that 61.8 level. Now that 61.8 level, all I've done is I've grabbed a line from there, stretched it out to the top there, and the 61.8 level, retracement level, is there. Okay? Alright, final one for the week. The Euro Aussie. Okay, the wedge that we were tracking broke down, so that means no trade. Nothing really happened, so I can get rid of these lines. On a daily chart, a lot of double bottoms this week. Let me zoom in. Oh, this one's almost ready right now. See, this is what I was talking about. This is the kind of setup that I'm looking for, where the wick comes down to that level there. See the wick? And now, right now, I'm getting an inside candle. So tomorrow morning, if this candle, let me zoom in a bit better so we can all see it. So tomorrow morning, if this candle finishes exactly like it is, then what you do is you put your order just at the break there to go into this direction. Okay? So, and remember, if we break the bottom, cancel your order out. So, and the wick, we can clearly see that the wick went into that area there. So what this is basically saying is that the price is driven down, and then we had all the buyers come into the market and push it back up. Now, if this candle finishes exactly where it is, tomorrow what you'll see is a fractal over here. So, and these two candles will give you a counter trend, which I'm going to cover in more detail this week on Thursday, a counter trend trade in that direction. Okay, and effectively what I'm doing is I'm trading the double bottom. Okay, this one is one candle more advanced than the other ones. Does that look correct to you guys? Do you understand what I mean? In this week's class, this week I'm going to cover price action in a counter trend situation and within trading patterns, support, resistance, and so forth. So I'll find as many examples as I can. I'll cover it in quite a lot of detail. So we'll cover that this week. But ahead of time, this is a setup already. So I just need to wait for this candle to finish, and I could get the trade that I want tomorrow morning at 9 a.m. my local time, Sydney. Okay? Alright, let me have a quick look on a 4-hour chart. No, there's nothing there. Okay, so let me go back, summarize. If you have any questions, type them in right now while I go back and have a look. Aussie dollar, we are in consolidation at the moment. It looks like a little consolidation zone. We're already short on this trade, but if we get a break of that 76 level, it's looking good to keep going down. Alright, so that's what we're interested in. We'll just have to pan out and see. Euro USD, we have nothing on the table. We are sitting on a 1618 Fibonacci level, and if, like I said, as long as we don't have our body closing below that, you may get an opportunity to trade the bounce. Okay, but you need to wait probably this one till about Wednesday or Thursday. GBP USD, we want to see what happens at the 150 level. We are approaching. Okay, so again it would be like a double bottom type scenario at the 150. Need to wait. Gold, geez, lots of these double bottoms. Gold right now double bottom as well. You just wait and see what today's candle finishes at, and you need to wait for tomorrow as well to see if you get an inside candle or not. US yen, okay, it looks like we finally are breaking towards the top. Okay, so we just got to hang on and just go for the ride. Euro yen double bottom situation, it's not quite there yet. Kiwi dollar, it's a 61.8 bounce trade. Don't take all of these, guys. If you want to try one, try two of them. Don't double up. Effectively, a lot of these are correlating. Okay. And finally, the Euro Aussie. The Euro Aussie looks the best one. All right. This one will be ready tomorrow morning. Okay. So I'll send a message out for this one if I see it. If it sets up, I'll send a message out tomorrow morning for this one. Any final questions before we call it a day today? Does anybody want me to have a quick look at something that I have not shown in today's session? I've got a couple of spare minutes. No? We're all good? Fantastic then. Alright, well, as always, if you have any questions, if you want me to double check your setups or anything like that, email me at the Traders Club and I will look at them. I will draw on your picture, make comments, send them back to you. Other than that, enjoy your trading week. I will see you all on Thursday at 3:30. Okay? Bye for now, guys.